everybody. Welcome to the Trading Market Technicals morning call video for Thursday, October the 10th. Markets did catch a little bit of a bid before. This is before we had some selling coming in early in the morning. Dow up 26, Nasdaq down 17, S&P relatively flat, up 95 cents, and the Russell down 380. Well, we did get a little bit of a bid, like I was mentioning, and I do think the markets are pretty much ready for a dead cat bounce, at least a decent retracement rally to the upside. We are oversold. At one point, I think we're down 11 out of 13 days. And again, markets just don't go straight down or straight up. We do have some intermediate bounces along the way in a downtrend, and then, of course, some sell-offs in an uptrend. So what I'm looking for today would be, if you're looking for some strong stocks that held up well in this carnage that we had the last week or so, but even more Monday, I'd be looking for stocks Monday, Tuesday, this whole week, Wednesday, that held up well. Particularly yesterday, if stocks were holding up well yesterday, I would look for some follow-through, some more interest in buying like Apple, and I have Apple here. Apple held up relatively well. As you can see here, we're still stuck in this zone, but it looks like to me that Apple might be ready for at least a move out of this range, and this is what I would be looking for today. And any stock that basically held up well yesterday, or at least this past week, and I'd be looking to buy pullbacks. As long as the markets have a decent hold here, and any of the gains from the overnight session can be maintained, then I definitely think that looking to buy pullbacks is going to be a safe bet to do for today's day trade. Now, if you're swing trading, I don't know if I would be actually adding to any positions, but I definitely would manage and tighten up stops and move your stops up. For the longer-term investor, I do think there's a little bit more downside before October is over. I think we get a little bit of a pop maybe today, tomorrow, even into Friday. Today, tomorrow, even into Monday, and then let's see where we go from here. The debt ceiling issue still hasn't been resolved. I do think when that does happen, or they kick the can down the road one more time, the markets will probably get another push higher. And I think at that time, we're going to probably get the markets will get sold into at least one more time before going into the holiday season. But we'll show you that in the chart segment. So here's why I think the markets are probably ready for at least a little bit of a bounce. We have the tick now down at 0, right, and the day tick. And what happens is usually, right, in an uptrend, we have an uptrend, tick stays above 0. And every time you hit that, we have a big move up. You can see here, right? Now, you're going to get chopped in between, but here a move up, here a move up. So you see what I'm saying? You see what I'm talking about, right? Up, up. Now we're here again. See how we did this? And we bounced back up again. So we're at the 0 line. And let's see if we can rally again. So this tells me that if anything, if you're looking at past history, that we're going to get a bounce off the 0 line. Okay? Take a look at the Trusty McClellan oscillator. We are outside of the Bollinger Band. That tells me that the markets are oversold, right? And we are in an oversold state, right? We're down, I think we were at one point, we were down 60, 62, 63, and we ended up bouncing back up to close back in the band. That is a buy signal for me, anyway, for the markets to at least get a dead cat bounce. Okay, another stocks above the 50-day moving average. Remember, we were up in here in this area. I said I'd like it to see get into the high 20s, low 30s, and sure enough, we're in 38. Another logical spot for an oversold bounce to the upside. And of course, the VIX. I mentioned the VIX. Now this year we had a bunch of chop, right? We closed outside, we went in, but we never got the buy signal because we actually closed up higher, and then we did the same. And then we bounced up again, we closed even higher, and now we're back out of it into some heavy resistance, and now we've actually rolled back in again. So today, and this is a great play, guys. If you're looking for a play, it's not going to happen every time, but what happens is that when you're looking for a VIX, when a VIX shoots out and at these highs, especially at these elevated levels, this is a great way to sell volatility. And I'll tell you why. A lot of the fund managers, they can't short. So what they do is to protect themselves, they buy VIX. And it doesn't matter. These guys are like elephants. They buy them here at the high. It doesn't matter because they need to protect their portfolio. Although, and you know what happens, volatility drops really hard. And now they're holding that VIX options or VIX itself and breaking lower. So this is a nice little trade. Now, getting back to the signal, this to me today, if it opens inside the band, really it should close inside the band. But to me, I like the fact, if you want to be a little bit more aggressive, once we get out of it, we'll see what happens when we close back in it, which we did yesterday. So to me, that this is a buy signal for the markets as well. Take a look at the put call ratio at elevated levels of 130. This was 139 back in June, and we had a huge rally the whole summer. And if you recall, from June, the June 24th lows, we had a big rally back up into here into late September. Now we're back at these elevated levels here. If you're a contrarian, this is a buy signal. So I would be looking for at least a retracement rally for the next couple of days. We'll see. We'll take one step at a time, but I will be looking for a retracement rally going into possibly Monday. But we'll take it one day at a time, especially when we have a lot of headline risk. And of course, the government can say anything at any given time, and that could skew the chart. So just, please be aware of that. All right, get right into the chart segment here. Spiders broke the fib cluster here, 166.60. We have another one down below at 162.80. We're right in here in between. Now, if you look back here, and I want to show you the volume profiles. You see our volume zones? We are into some heavy supply here, so this is a decent spot for at least a little bit of a bounce. Would not surprise me if we got back here. Now, I would be looking for a test of the 20-day moving average at 169.57 if you are looking to short this market to look to start legging into a short. Remember, have a little bullets left. Don't just go out and short the market here. Lay into a short position. Maybe short a little bit here, maybe short a little bit here, and know and define what your risk is and what you're willing to lose on the trade. Then it's comfortable. You don't have to worry about it. Position size it accordingly to your account, and then let it work for you. Okay. We are, you can see, oversold here, deeply oversold. So I am looking for, again, a bounce in the next couple of days. Here is the 30-minute. As you can see here, we broke down here. So the chart's going to need a little bit more tightening the Bollinger Band before we really know which way we're going. But again, I am looking for some upside for the next couple of days. Diamonds tested the 200, weakest of the 5 sectors that we follow. Diamonds now have a doji right on the 200. That doesn't mean that it's a buy. It just means it's indecision. But again, first test of the 200, I would probably be a safe bet to say that I'd be looking to buy. And if you're looking for an ETF play, and if the diamonds can take out the 148.43, which is yesterday's high, I would be looking to scale into a long position here. At least test the fib cluster here at 149.77. And of course the IWM. Now again, buy strong stocks, sell weak stocks. I would be looking for, again, in this case, ETF. If the IWMs can take this out on a 50-day moving average, then I think you're going to get a bigger retracement rally because the Russell has been holding up extremely well in the last probably 2 to 3 weeks here. So keep an eye on the IWMs if you're looking for that trade. Here's the transports, held up the long-term uptrend line from the November 2012 lows, doing quite well here. So this is almost a year. This has been moving well. So just keep that in mind. Nice doji. If we can get back above the 50, at least the test to the 20 would be probably not out of the card, out of realm here. That I would say that the 20-day would be the first target to the upside retracement rally, and then you really got to reevaluate and see where we go. And here's Goldman Sachs now. Now, Goldman had a little bit of good news yesterday, so this is interesting about Goldman. Berkshire Hathaway took a passive stake in Goldman Sachs, actually put a little bit of a bid here. It doesn't, to me, I think we still need to take out 156.56 and then, of course, 160. But if you're looking for some sort of a bounce play, a retracement rally, that's all that would be for now. But we do have a little bit of a catalyst. Let's see if this, if Goldman is actually starting to going to break higher here. Because again, remember, Goldman is still in a downtrend, and you'd be playing a retracement rally here with heavy resistance back into the 160 area. So define your risk. It is well defined here. It would be stop below the 200-day moving average. And if we can build on this candle, then I think you get at least a little bit of a pullback, maybe a 2 or 3 point trade in that stock. Okay, and let's take a look at the XLF. Now, the XLF broke the uptrend line from November 2012. Not looking too good. We're going to need to get back above it relatively quick. Otherwise, we can really fail here. And if the banks are going to start to fail again, then I think this retracement rally will be short-lived. You need the banks to rally along with tech and some of these key sectors here. And, of course, lastly is the Qs. We broke back above. We need to get back above the 50-day moving average. All right, guys, be safe out there. But I do expect a little bit of a pullback, a little bit of a retracement rally, for the next couple days, and then we really need to reevaluate it. Our gold and oil, just real quick, I do think I see gold much lower, but I want to see a little bit of a bounce before we look to short anything. And crude oil right now, no trade. Crude's going to have to get into some support and really start to base a little bit before we would enter another trade. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.